Morning, everybody. Volume looks like it's working this morning. We are live on Facebook, LinkedIn, YouTube, X, Instagram. We're good to go. Look at people streaming into the show this morning. Good morning, everybody. Let's get at it. I think we're good to go here. October 8th, 2024, episode 286. Welcome to the show. Welcome to Mornings with Scott, the best damn business show for medium and small businesses on the planet. Can we get rid of some of these banners? Let's get rid of those. Is that better? Yeah, I think that's better. We got another viral video going this morning. I told you we had a viral video from this show last week that got up to, I think it's petered out at around 77,000 views. Well, one of the ones that was posted from yesterday's show has already got up to 6,000 views. And so thank you. Thank you for all of those, for those of you that are listening and that are engaging and sending me DMs and all that sort of stuff. It's cool. It's cool. I enjoy it. Thank you very much. Airbus this morning. Airbus is struggling with deliveries because of supply chain problems. It's hurting their earnings. Their stock is way down, and it's all because of supply chain, to which I say it's not me. I've been delivering, Airbus. We've been delivering all the time. Hey, thanks for the awesome note there. I've been delivering all the time, Airbus. Your helicopters are safe with us. Donald Trump, DJT, symbol DJT. Trump media was up 12% yesterday. And then up another 3.5%, 4% this morning. It was 4% pre-trading, and just as I was logging off, it was 3.5%. So that's like 15% in a day, in like 8 hours of trading. So it's interesting. I don't know. I don't follow this stock very much. I believe this is just Truth Social. But the stock seems to follow the fortunes of the campaign, right? Because the excuse or you know how these financial networks always just make, whoa, the stock is down today because of this. They don't know it's because of this. They're just making that up. They're just like, oh, stocks went down. There was a hurricane in the world, or there was some dock strike or whatever. And they go, yeah, that must be why traders are driving this stock. They have no idea. They're just making that up. And so the yesterday made up excuse for the DJT stock was that Musk was on stage at the Butler rally last weekend. I don't know. Maybe, but I do know it's got up 15% in basically a day, which is a pretty damn good return that I did not get. But it seems to me this stock just seems to follow his fortunes, which is weird because I don't know. It just seems like it's nothing to do with the value of the underlying business and social media platform. Or maybe it does. Maybe it's just like a complete 100% promote tied to his fortunes in the campaign. Either way, if he wins or loses, doesn't this stock just have to be at a high, like right now? How could it not be? What do you think? I don't know. I don't understand how it could not be at a high right now, and then it's just going to go down from here, whether he wins or loses. If he loses, then the bloom is off the rose. The election, what's the rush? The rush, the excitement around the election kind of goes away, and he's not as relevant as he is because he loses, which, by the way, was my prediction, not because he doesn't get the most votes, but because of shenanigans going on. And if he does win, then I think he's busy, and I don't know, maybe can he promote this at the same time? I just don't see how this platform is not at its all-time high right now, which makes me interested. I'm going to look into that more. Let me know what you think in the comments, but I will tell you this, that I am not your financial advisor. I am not registered nor trained in teaching you about how to buy securities for your personal financial planning. And so I do not do that. I have from time to time shared my position on things, but you get your own advice. Do not listen to me on that, but listen to me on business matters, because that's where my expertise truly is. Speaking of which, what are you doing today? Well, I am shooting module 2 of my course. So module 1 was released September 15th, and it's going to release one module a month. And so October 15th is coming up. Module 1 was about change and why we all resist change. Every troubled company I've ever seen, ever, that I've ever worked with, was resistant to change. That's why it was number one as the module. And it teaches you how to identify your key performance indicators, how to manage with KPIs, which are objective measures of how your business is performing, how to identify those, how to measure them, how to monitor them, and then use them to improve your business, and how to implement continuous improvement by regular constant change as a meta system of change, a system for systems, in other words. That was a fantastic module. Yeah, it's a little long. It was a little long. It's a lot of content, but it's great value for money. I'm willing to bet it is the best value for money business content if you want to learn business, available anywhere, which is why this is the best damn business show for medium and small businesses on the planet. The feedback's been amazing. Well, this module 2, that I am shooting today, by the way, I was setting up the studio here to do this. Can I show you? Can I show you how that? I don't know if that. What if I do this? Can you? There you go. You can. Well, you can kind of see what I'm trying to do here. Anyways, I will be shooting that. It is on cash flow, ways to budget your cash flow, understand cash flow and working capital cycles, plan, improve, communicate, build a 13-week cash flow model, a proper template for building a cash flow model that you can use for your own self, again, to budget and do sensitivity analysis to improve your cash flow, but also communicate your cash flow to lenders and investors in a much more sophisticated way than you are probably doing right now. Believe best now. Yeah, exactly. Thank you, RR. You will learn. You will learn about the working capital cycle. By the way, cash flow, improving your cash flow boils down to what? Exactly. Think, you ever thought about that? How do I improve my cash flow? It's super simple. It's super in concept, maybe not simple in concept, maybe not simple in execution. But the concept of this is you need to collect more, and you need to accelerate your collections. Collect more, accelerate collections, pay less, defer payments. That's it. That's cash flow. If you can do one of those 4 things or some of those 4 things, you will improve your cash flow. And so in this course, you're going to learn about working capital cycles, like how many days lag is there between when you actually have to pay for your inputs. Like, let's say you're manufacturing this phone, or you're buying and reselling it. And so you buy the phone for your inventory, and then you pay for the phone that you just bought, say 30 days later. You hold it in inventory for 60 days, and then you sell it to a customer, and you collect from that customer. You have a receivable for 60 days. So how many days is there lag between cash out and cash in? And what is that in terms of dollars? And if you can improve that by collecting more, collecting faster, paying less, paying later, what most business people, small, medium-sized business owners, don't understand is that is an equity injection into your business. It is free money that is tied up in this working capital cycle, and you ought to be thinking about that. So the course takes you through that. The module takes you through that. And of course, just like module 1, there's a PDF download workbook that will be available to you. And in there will be a number of tricky ways to improve your cash flow that you maybe haven't even thought of. And if you buy the whole course, which you will, you can buy individual modules, but better just to buy the whole course. And when you do, you get 2 free 30-minute coaching sessions with me, yours truly, virtual coaching sessions. You can talk about whatever you want in your business. You can talk about whatever you want in your career. 2 free coaching sessions, and included, they're 30 minutes of coaching, but I actually commit to spend a half an hour before and after. So I'm spending an hour in total. and preparing to make sure that it's useful for you. I'll read your pitch deck for you or your business plan or whatever you want. You can see some of my coaching sessions on the YouTube channel of the Winning Momentum podcast. You can go look that up. That's where this Mornings with Scott streams to on YouTube. And if you search on there, there are pre-recorded coaching sessions. You can see how awesome those go. But the point being, those are valued at $500 a piece, I think. So it's $1,000 of value right there, which is like 3 times more than you're paying for the entire course. Don't hold me to the 3 times. I'm not sure what the pricing is on the website right now. And so there you go. I'm shooting that today. That should be out. That should be out October 15th-ish. And I'm excited. I'm excited to help you with your cash flow. Speaking of cash flow, remember we had our friend Jeffrey Hiscock on the show maybe a month ago. Jeff, we're talking about you today. We discussed, among other things, the private debt markets and the lack of capital available for your business, for medium and small businesses throughout actually the world. But we talked about the US and Canada. But there's a real tightening of private credit available for businesses. And he described the problem where the private lenders themselves, the non-banks, this is a serious issue in Canada right now. They also are having trouble with their own capital, because what these banks do, what these financial institutions do, if that's the right word, these private lenders, is they raise a bunch of money over here that could be from the retail market. So they're part of a fund, they're managing a fund in some way, or they have some private, they have some pension fund money or some large institutional money that's allocated to this sector. And these people really become the manager. So you do the deal with the private lender, but the private lender is really an intermediary working on a spread, right? And they're doing the loan origination, the administration, all that sort of stuff. And the unit holders or whoever provided the money is getting some of the upside that and paying a fee to that private lender for doing that. And so the private lenders themselves are having a real problem with access to capital on their side. Why? Because there's been some public blow-ups in the industry, particularly in Canada, but also with interest rates high, it's hard to justify investing in the extra risk of a private lending product. Like, let's say a private lender lends, I'm just going to make up some numbers, okay? Don't hold me to this, but if you're a private lender and you're lending out at say market is 12% for a higher risk, transitioning business. So your first secured, you're at 12%. I know you Americans are, falling off your chair because that's a super expensive loan. But let's just say hypothetically you're 12%. And let's say that the private lender itself, needs to have 2.5%. So you're down to like whatever, after fees and this and that and legal. So you're down to like a 9-10% return for the investor in this private lending operation. But risk fee returns in a high interest rate market are like 5% or 6%, and the markets are going up at 20%. Which is not risk-free, but might be a parallel risk to private lending. Like, it's just not a good product. When interest rates were down at 2% and we were lending in Canada at 18%, well, that was a pretty good product. But the margins have really crammed down on that. And then some of these private lenders, particularly north of the border, have been losing money for whatever reasons. I mean, I know the reasons, but I don't have time to get into it right now. So bottom line is, these lenders don't have the cash, but they're still going about the business as if they do have the cash, because they're waiting for markets to turn so they can get the cash. And so you, as a business owner and manager and leader, you need money. You go out to these private lenders, and the private lenders are going through the motions, but they're just not in a position to close. They don't have the funds to close. And I'm not saying they're doing something nefarious, although some of them are, but many of them that are really good people and have closed deals in the past have just been caught in sort of this weird market and transition. But for you as a business owner, you start paying fees, due diligence fees, legal fees, you've wasted 2 or 3 months and you're not going to close. And according to Jeff Hiscock, if you go back and listen to that episode, you were never going to close because the lender didn't have the money to begin with. Well, as someone coming from outside, and again, that's from on the Jeff episode, really a bit of a Canadian perspective, but in America, as someone from coming outside of the US, checking my comments on Instagram here, it's always been my perspective because I have this sort of outsider view of things that may be a different perspective than some of you in the audience. But it's always been a joke of mine since I was much younger in my career that it seemed to me in the US, the entire country boiled down to about 3 guys with all the money and everybody else is a broker. That was always my joke because it's kind of true. That was my experience. Is like, yeah, you think you're talking to somebody with money to be an investor, a partner on a deal, or what have you, and it turns out that they're just fronting for somebody else, who in turn is fronting for someone else, and it's like one of these Russian dolls. So, so that's always been my joke about America, and it's so prevalent, including in the private lending space. Like what started was people are educating and raising money from private citizens because cost of money from traditional private lenders is expensive. So I think your point there is that people are going to angel communities, and you're in the real estate business, so you're probably talking about private mortgages on a whatever flip, buy, renovate, flip. Yeah, maybe. I mean, that's a retail market, and you have to go where you can get the cheapest cost of capital because you're on a very tight margin in your business, and your cost of capital can change that entire deal for sure. Anyways, what I found in the U.S. is everybody is a broker, but it's so ingrained into the culture of business in the U.S., which I've never seen anywhere else in the world, that many firms, private lenders, different types of firms set themselves up as if they are lenders when in fact they're really not. I used to know, I'm not going to drop any names on this, but I used to know, and they're still around, very active. I think they faked it until they made it, but there used to be a lending firm in the US that had hundreds of employees and multiple offices, huge marketing events, people flying all over the place at great expense. And it turns out they didn't have any money. There was a deal generation machine. They would do the due diligence and the legals and the structuring and issue the term sheets. And then they would go to a handful of backers that they were close with and see if they could pitch the deal to them. And that was, hey, Catherine, thanks for joining us. Thanks for listening. So that was never a pitch of theirs. And I always thought, I don't know, is that legit? Are you allowed to do that? That just seems a little off base, but it is part of the culture. Well, yesterday, all of that to say that that's my experience in the US, and as a borrower, as someone running a company looking to borrow money in the private space, you have to know who you're dealing with. So I had a chat yesterday with a younger professional that I like very much, and she is a family office expert, operating in the US, and she's trying to help you guys, middle market, smaller businesses, to provide value to you and to find deals in that space for the family office community in the US. And she was explaining her frustrations to me with the exact same thing that I just described in the private lending market and in the angel market. There's all sorts of individuals I found in the US that are also just fronting for somebody else and brokering and try to take a fee out of this thing. So she was explaining that in family offices in the US, it never occurred to me, but it's the exact same thing. According to her, most of the industry has no money. Now, I'm not disparaging family offices with money. 100%. There's a small group, a handful, whatever the number is, of family offices that surround themselves with one or more very wealthy families and manages their affairs, and that includes making some investments, and that may include into middle market, smaller businesses. That's all legit. But what happens, particularly in the entrepreneurial US, I guess, is that there a whole ecosystem evolves around of that, of somebody just waking up in the morning and say, yes, I'm a family office too. And I'm just going to hang my shingle up as a family office and that I represent a bunch of money, when in fact, you're just a broker. So she says the entire industry in the US, as far as she's concerned, is just full of that ecosystem of scam, which surround themselves again around the actually legit operations, which for sure there are. Then she says the next step is what's happening is that marketing companies are starting to arrange, or not starting to, but have been arranging and promoting conferences with family office investors. And so I know that's to be true because I get cold emails to this things which I've never looked at, but she's been involved in lots of these. And so you set up a conference, you invite a bunch of mid-market, smaller businesses to meet, quote unquote, the investors, and then you charge them money. And then you have the quote unquote investors there, these family offices, to set up booths or whatever the format is for this thing, except all of these family offices that they're bringing in have no money because they're just part of the scam around the ecosystem. And so you're selling these tickets and nothing's ever happening on deals. It's just people talking to each other and paying a bunch of money. And so she's very frustrated with this, and she's looking for ways to hack through that and to provide value to this audience and to her own audience, which are very similar audiences. So it sounds the same. And what does that mean? What does it mean? Like, I don't want to accuse people of things. I'm not even sure. Like I told you about this private lender that did not have money, as it turned out. I think they do have money now. I think they faked it until they made it, if I can express it that way. And is that wrong? Probably it's wrong. But it's just it's a weird cultural thing in American business that I've never seen. What does that mean for us as business leaders, as people who need to use that access to capital? Well, as Jeffrey Hiscock warned us in that episode, you need to know. You need to know who your counterparty is. You need to do your due diligence on them. Have they closed deals? Are their professionals legit? She went as far as to say you should ask for their bank statement. I don't think anyone's going to give you their bank statement ever. I'm not trying to argue with her. I've just asked my point of view. But you need to know if they're closing deals. You should get references from their last transactions. Yes, sir, commercial lending is unregulated and you don't need a license to broker. Yeah, exactly. So your problem is, if you're running a business and you need money and you think, okay, I don't have to rush out. I don't have to close today because I've had my 13-week cash flow. I know I need money. I know I need it 3 to 4 months from now. I'm going out to the community. It gives me lots of time. And then you spend $50,000 on due diligence and waste 2-3 months with someone who, it turns out, doesn't have any money and can't close this thing. That's a serious problem. That can ruin your entire business. You could close up. You can go bankrupt. You can have personal guarantees called. Like, that could ruin your life, that particular situation. I'm not trying to be extreme. I'm just saying there's real circumstances there. You can't afford to do that. Oh my goodness, I have 5 minutes left and I have a whole section I want to talk to you. Let me just bang this out quickly. KPMG says 9 in 10 Canadian CEOs are considering making an acquisition within the next 3 years to help boost their company's growth. Yes, this is true. And it's also true in the US. This is not just Canadian, but this happened to be a Canadian survey. So they did 2 surveys released yesterday, and it shows that 4 out of 10 CEOs are planning major deals, and 3/4 of small and medium-sized businesses are planning major deals in 2025. Why? Because they can't grow on their own. The research study doesn't say that. But when the economy sucks, and they think there's going to be access to capital and interest rates are dropping, what do? Well, you try to consolidate. That's what you do. The industry. You try to buy other companies, merge with other companies, do some sort of deal. And I think that's what's happening here. Canadian chief executives see mergers and acquisitions as their second most important growth strategy behind organic growth, obviously. Meanwhile, smaller businesses, recent interest rate cuts by central banks in Canada and the U.S. and lower inflation are breathing life back into the M&A market, says John Cho, national leader of KPMG and Canada's deal advisory practice, in a press release. I like reading the KPMG deal practice stuff because I am alumni from there way back 30 odd years ago. As the cost of capital eases, investors and corporates are becoming more confident about making acquisitions. And since I'm running out of the time, let me just skip ahead and see if anything else in here is really important to you. About 80% of survey respondents said they're looking for a long-term investor with patient capital and advice that can help them scale up, while 77% are seeking investment for 10 more years. Look at it has been a premise of Mornings with Scott since I started this in July, that the economy is in serious trouble. It is in serious trouble. And it's going to get worse when Harris is elected. Way worse. We are in trouble. If Trump is elected, not so much. There may be a bumpy transition there. But in my view, that's not what I'm calling. I think Harris is going to get elected, and I think it's going to be a disaster for the economy, and I think it's going to be a disaster for small business. By the way, did you see her? I think it was yesterday. Oh no, it was it was yesterday on the 60 Minutes promoting her $50,000 deal for small businesses because she loves small businesses. She doesn't seem to grasp, or maybe she's just lying to us. I don't know. Like, it's a tax deduction. That's what she's promoting, is a tax deduction. So how do you get a tax deduction as an entrepreneur? Well, first, you have to capitalize and start your business on your own. You don't get the 50 grand to do that. Then you have to start up operations and invest in your working capital cycle from this 13-week cash flow that I'm talking to you about. You got to do that on your own. You got to go off and find that from somebody private or what have you. And then the capitalist market. Then you have to earn money. You have to actually earn money and be profitable, which 90% of new businesses don't do that ever. And the other ones don't do it for a long, long time. And then once you've earned money, if your business is not too old, then maybe you don't have to pay tax on that to the tune of $50,000 because of this proposed program. This program does nothing for entrepreneurs starting up a business, and nobody on her side of the aisle, well, actually on the other side of the aisle, I've never heard a Republican say that, ever. So I don't know what this is supposed to be doing for businesses, but I'm going to tell you what it's going to do. It's going to do nothing, because you still have to start your business on. And by the way, she did say she wanted to, I don't know how I got on a Harris rant. She said she wanted to have 25 million new businesses during her first term, which is 4 years, which is, as far as I know, last I looked, maybe it's dropped a little bit, but we were in the US incorporating and launching roughly 6 million new businesses a year, times 4 is 24 million. It's exactly that number. She's proposing nothing. She's just saying words, and and it means absolutely nothing. All right, that was the KPMG study. Here's the point. The point is, manage your cash flow, have a 13-week cash flow, buy my course, know your counterparties, because there's a bunch of people out there in both countries that are trying to convince you can get money from them, but in fact, they don't have any money. And know that when the economy sucks, if you can in fact finance it, an interesting idea here coming down the pipe will be industry roll-ups. We'll talk about what a roll-up is more some other day. But industry roll-ups, M&A, cutting out redundant expenses. In fact, strategic party acquisitions. In fact, we are selling a business at Sinclair Range right now. You can go look at the Sinclair Range website to check that out. I'll talk more about that perhaps tomorrow. Thank you, everybody, for listening. This has been Mornings with Scott. I'm a little bit over my time. We are 8:30 Mountain. Weekdays, and tomorrow might be the last show for this week. I'll explain why tomorrow, because I've got some traveling plans. Thank you all for listening. Do I have anything on Instagram I need to respond to? Hey, Miriam, thanks for joining us on Instagram. I hope you enjoyed the show. Thanks, Catherine. Thanks, RR. I don't have anything that I need to talk about anymore, so I am out of here. See you tomorrow.